Yo, what's up, guys? In today's video, we're going to be going over how to journal your trades, going over your rules, also going over certain strategies, setups, a daily morning routine, basically how to track your trades, all of the above. And this is going to help you a lot with like tracking and collecting data on your strategy. Also, journaling is a very important part, and we'll get over that. So the first thing I want to get into, obviously straight to the point, no fluff, no sugarcoating, no fancy edits. I want to get right into this education. You guys should be studying this every single day. This is super straight up course. So the first thing I want to get into is the rules, right? These are going to be just a couple of your trading rules. Obviously, you guys are going to have way more rules, like sticking to your stop loss, you can't overtrade, you should not oversize. Those are simple rules. These are going to be rules that align with your strategy. So the number one thing that I want to talk about is only trade breakouts when we're above the 10 and the 20, right? It's a very, very important concept, very simple, right? We're not trading setups like UPS, right? If we look at UPS, why would I even look for a breakout right here, right? You see how this is on a downtrend? It doesn't even look good. Yes, it's building resistance, and yes, it could do something like this, but it's below the moving averages. That's something where you just want to stay away from. Make sure you're looking at stocks that are obviously moving up and they're creating a wedge, a flag, and they're above the moving averages. That is the number one thing. Now, also, a good thing is to look at the 200. Now, there are some exceptions. Sometimes if it's a good stock and I think it has potential to bounce and it's below the 200, maybe I'll take it with the lighter size. But I would say most of the time, I am looking for every single stock that I'm taking to be above the 10, the 20, and the 200 moving average. Very, very important. Now, the next thing is ADR, right? You want to make sure that your stocks are at least above a 2 to 3%. Like at least. If they're above a 2% to 3%, that means that, you know what I mean, it can actually move on an average. If you have a 1% ADR, you know what I mean, you're not going to want to swing something like that. You have to realize taking stocks that actually move is the way to go. It's how you're actually going to catch, you know what I mean, parabolic moves that go really, really fast and really strong. That's what we're trying to take. We don't want to sit in anything that's just super slow, not really moving. We want to make our money and we want to make sure it's actually moving, right? So it's super, super simple. You want to make sure that your stocks at least have over a 2 to 3% ADR. Now, the next rule is you want to see a prior move before the wedge, the flag, or the base, right? So if we give an example on AAPL, this is Apple. You can see we had a nice base right here, right? Now, not this up here. This is actually setting up again. But right here, right, you can see that we had a pretty nice base, right? Nice base, but look at the prior move, right? Let me show you right here. The prior move before the breakout, 20% move. That's pretty valid. Obviously, the ADR is not crazy. This is about a 2% ADR. This is an exception because it's Apple. Apple is a huge company. It's not like a shitty stock that has a 1% ADR. You know what I mean? So almost a 2% ADR. This is something I would still take because it's a good company. Now, you could see, also, before I even go into that, that does seem like you're going against your rules, but just make sure it's a good company. Like, if you're trading Disney, and this is a 1.7 ADR, this just isn't like the best of the best company, in my opinion. You know what I mean? Look at it all the time. Not the best. You look at Apple, look at it all the time. At all-time highs, right? Very, very good company. You guys know it's a good company. Give me 1 second. Zeke, come on. Go. Had to let my dog out. I'm not even going to edit this out. I'm a real ass dude. Straight to the point. I have no time to edit these videos anyway. I just don't feel like it. There's no reason to, man. Those videos that are super crazy edited, please do not watch them, man. You're not going to get real advice out of them where you can make millions and millions of dollars. Like, none of the best traders are editing their videos. They're just showing you the real advice in the stock market. So I know I've said that 100 times, but I just want you guys to focus on the real education. So you can see Apple has a really nice base right here, right? Higher lows, lower highs, really nice base. Boom, right? Big breakout. You can see, but we made a prior move. So that's very important to understand. We saw a 20% prior move before that base. So that's how you know that the stock is actually gaining some momentum. Remember, we're trading momentum unless it is a really tight wedge. So let's give an example like something like this. Good example, right? On run, obviously this was earnings, but you see how we didn't really make like a crazy move right here? Like, this was low-key, pretty big move. But like, you see how we didn't like rip? but it's still a super tight wedge. So these are like the only exceptions for breakouts like that. And you can see out of that breakout, it absolutely ripped. So obviously that was earnings. We're going to pretend like it was not earnings. Imagine this was just a normal breakout. You know what I mean? This is a perfect wedge, you know what I mean, to take. But other than that, you want to make sure that you are taking setups that actually make a move before. The fourth rule is to cut your losses at negative 20 to 25% max per position, right? Excuse me. Very, very important. A lot of people hold their losers forever and ever and ever, and they're holding their positions negative 50, negative 75%. What are you doing? You know what I mean? You're just praying for that stock to come back into profits and to save the day when that's not going to happen. You know what I mean? And if it does, you get lucky. That's not a good habit to build, and that's not a systematic approach to your trading. So make sure when you see your stock not breaking out, when you see you're getting faked out and you just got a bad entry, or, you know what I mean? The stock is just not working out, because it's possible. Remember, stocks don't always just go up forever. There's going to be fake outs. You're going to have a hard time with this in some market conditions, and that's just how it is. You know what I mean? That's trading for you. So realize that, accept the loss, and move on. Super simple. So make sure you're cutting your losses super quick at negative 20 to negative 25%. When you can do that, you're setting yourself up for success, because you have to realize that these swing trades and these breakouts that we take, they can go anywhere from 50 to 300% in a couple days. So that is a better risk to reward than, you know what I mean, losing 100% or letting that position ride all the way down. You know what I mean? You're not giving yourself any room to win. But when you cut your losses super quick at a negative 20% stop loss, you know what I mean? If you hit 100%, you're already having a very, very positive risk to reward. So hopefully that makes sense. Now, the fifth rule is never risk more than 5% of your account. Me personally, I even think that's a little too much. But when you do have a smaller account, like let's say $1,000 to even, you know what I mean, $100,000, like low key, like when you have a $50,000 port, like that's still relatively like mediocre. Like that's not a huge portfolio. Like some people think like $50,000 portfolio, it's not that big. It's not. Realistically, $50,000 is not like a crap ton of money. You know what I mean? You can't even live a whole like couple years off of that. You know what I mean? So you have to realize that a small port like 1, 2, 3, 4, even 10K, you don't want to be risking 5 or more percent a day. Usually you want to risk around like 3% is that good sweet spot. So just make sure, let's say if you have a $1,000 account, you never really want to lose more than 30 to 50 bucks per day. If you're losing $100 to $200 on a $1,000 account, guys, that's 10 to 20% of your account. You cannot lose that much, and these are very strict rules that you need to apply into your trading. So really write these down, put these in your rule book. I have a whole whiteboard right on the side of my wall right here. It shows me all of my rules. Make sure you just stick to them. Give yourself reassurance. Write them down in a journal every day. Tell yourself, I'm going to stick to my rules every single day. You cannot go against these rules. That's how you will become unprofitable and stay unprofitable. Now, the next thing is the strategy, right? The setups that we are going to be trading are flags, wedges, and tight ranges, right? And I'm going to give an example super, super quick. You can see right over here. This is a flag, right? We're going to go over it. Super simple. It's a big upside move, and then it's a lower high, higher low. Lower high, higher low. See how it looks like a flagpole, right? You can see this is the flagpole right here. And then this is the flag. It's like an American flag. And what we're looking for is we're looking for stocks to make big upside moves, higher lows, lower highs, get super tight, dry out in volume, and then boom, this is our breakout right here. Stop loss back into the range. And then we're looking for that next leg up. Remember, stocks move in like staircase patterns. They go up, sideways, especially when they're in an uptrend. So you want to make sure after a big move up, when it's creating a flag, you're waiting for it to tighten up, and then this is where you would be getting your entry at on the 5-minute close, of course. You guys already know that. And then a wedge is like maybe a big move up, you know what I mean? And then it starts losing the moving averages. These will be your moving averages. Imagine it gets below the moving averages right here. You know what I mean? And then it coils up right here. Oops, drew that wrong. It's hard, sorry. Boom, that's a wedge, right? So kind of shitty drawing. But like imagine a big upside move and then it pulls back, starts chopping. See how it's a super, super tight wedge? You're looking for that wedge pop right there for it to continue higher. Now, that's the difference between a flag. A flag doesn't lose its momentum. A flag stays super high, right? So a flag will look something like this. If we go on Wolf. Wolf had a flag. I'm almost positive it did. Am I in replay mode? Yeah. So look, this is what a flag looks like. See how this stock Wolf made a huge upside move and then didn't lose its momentum? Broke and kept going. right? So that's what a flag usually looks like. A wedge is something like this. This is kind of like a wedge. Look, so you can see, like, see how this isn't really like a crazy like flag, in my opinion. You see how it doesn't really like flag for 3 to 7 days. It kind of just pulls back and creates this like wedge type pattern. Not that tight, but kind of like a wedge. Or you can look at it like this. This is like a wedge. See how it's in a downtrend and it's just creating a super tight range right here? Lots of resistance, lots of support, and then you see a lot of volume out of it. Bang. That's a wedge, and you can see it followed through very nice. Now, the last pattern that we're going to be trading is a base, right? Big upside move, and then something like, you know what I mean, this. Maybe it chops back around. This is just a base. That was crappy. But, like, consolidation, right? That's all you're looking for. Lots of resistance, lots of support, super nice base. You're looking for the break out of that base to obviously continue higher. So that is the 3 patterns that we are trading, guys. Super, super simple. Now, the confirmation for you to actually take that is volume plus price action, right? You want to see a lot of volume. You want to see the candlesticks closing super, super well, right? Like we said in the other video, you don't want to see candlesticks that close like this above your level. You want to see candlesticks that are closing like at least like this, right? Super bullish candlestick, and you want it to be green above your breakout level. So imagine you have a breakout level right here. You want to see, boom, candlestick close above that. Obviously, your entry is at the close or on a slight pullback for a better entry. We already went over that, though. You guys should know that by now, right? Now, the entry trigger is basically when you're triggering that entry, when you're when you're entering the trade. Excuse me. It's a 5-minute candle close, or you can use the 1 minute for a faster entry. The 1 minute does have more of a false breakout rate, basically. So, like, the 1 minute is going to fake out more than the 5 minute would, right? So a 5 minute is just giving it that extra time, but a 1 minute could get you a precise, really good entry. But you have to understand that has a better fail rate. So sometimes, I'd say most of the time, I'm waiting for a 5-minute candle close above my level, above the resistance with volume. Now for exits, let's say when you're in a strategy, or I'm reading the fucking thing while I'm saying it. For exits, when you're in a trade, right? When you're in a trade and you are in profits, 20, 30, 50, 100%, what is your exit going to be? Now, a lot of people end up giving away profits. You know what I mean? They don't know how to exit properly. An exit strategy is just as important as a entry strategy. People think like entering is the hardest part. Yes, entering is hard, but also exiting is hard as well. Nobody knows exactly where to take their profits. And there's never like a 100% correct spot. This is why you need a system. If you have no system, you're not going to know exactly what to do. So for your exits, you are obviously going to be looking at the moving averages, right? I told you guys multiple times, the moving averages are your best friend. You need to be watching the moving averages. Remember, when the price is above the moving averages, that means it's supporting it. When it breaks below, it broke that support. Now you can see it ended up failing. So let's say if you're in a trade right here, if we look at the stock open, and we're going to look at it right over here, right? You can see we had a nice breakout. This is on the daily time frame, right? This was the breakout candle. Let's zoom in, show you guys. This is breakout candle. Broke out, went pretty high, you know what I mean? Obviously, you're going to be scaling out. Now, we'll talk about that next. You're going to be taking trims on these days when it's pushing up. And then you can see pulls back to the 10-day, you know what I mean? Holds it. You might be holding this the whole time. And then as soon as it, bang, fails the 10-day on this day, see how it broke below the moving averages? You should be out of that. And then look what it did. It just went to the downside the whole next week. So you want to make sure that you're looking at the moving averages on a 4-hour and a daily time frame. So if you go on a stock like Apple, for instance, right? Let's say if you took this breakout all the way down here. See this breakout? See how it's a super, super tight wedge right here? Or you could really look at this as like a base setup, kind of. I would just look at it as like a tight wedge. Like it's like a rising wedge almost. Like, you know what I mean? Just like a super tight wedge, super clean setup right here. You can see, super tight, wham, breaks out. Why would you sell it this day? Why would you sell it? Why would you sell it? Why would you sell it? You shouldn't be selling it any of these days. Let's say if you got a month out expiration, you should be holding it the whole entire time until, bang, we break below the moving averages. You can see, then it's in a downtrend. So hopefully this is making sense to you guys. You want to be holding your stocks as long as they are holding the moving averages on a 1 hour or a 4-hour and a daily time frame. Very, very important. Now, the scaling part of the strategy for your rules, you want to make sure you are cutting your losers quick. This is something that we talked about with the rules up here with the stop losses and everything. Like, please just cut your losses quick. That is how you're going to understand, okay, a stock is not breaking out. It doesn't really look that good anymore. it's not doing what it's supposed to do, cut the loss, accept it. Now, you should never scale into a loser. So what that means is if you have a stock that is losing, you should never add more to it, down lower, to like change your average. That's called averaging down. You never want to average down in a stock. If a stock is pulling back and you're down 15%, when you add more, usually it'll move your average lower. So, you know what I mean? You can get a better fill, but realistically, averaging down is just messing up your risk to reward. It's not even aligning with the strategy or your system, and you never want to average down. If anything, you only want to add when your stock is actually winning and maybe add a little bit more off of a pullback or something. But most of the time, you're never really scaling into trades. Now, to scale out of trades, your take profit system, this is what it's going to be, right? So let's say we have a breakout right here. Right? You have the breakout. There's, let's say, your flag, shitty drawing. But it breaks out, right? Your TP is going to be at certain highs over on the left, right? Because the left is in the past in a stock market. So let's say we have these highs. So one high right here is going to be a TP. Here's a high. Here's a high. And that's where you're going to be scaling out. So let's say, you know what I mean? The breakout happens. You hit 25 to 30% on your position. That is where you're going to be taking, let's say, 25% off or 30% off of your position. So that means if you have 100 contracts, you're going to take off 25 contracts at around 35%. Next TP, you know what I mean? Let's say 60%. You're going to take another 20 to 30 contracts off. And you're going to continue to scale out as the stock keeps pushing up. Now, remember, you want to watch the moving averages. They're the most important part of your trading. If it starts failing the moving averages, that's how you know to immediately cut the trade. Now, there's no reason to hold a stock that is, you know what I mean, going to break out up 50%. You don't want to hold it past break even. After you're up like 50%, 60, 70%, you want to make sure that like that stock is a risk-free stock now. That breakout, that trade that you took is now risk-free. Move your stops to break even. Understand that like if it doesn't work out, it doesn't work out. And then just close it. You know what I mean? There's no reason to hold a stock forever and just hope for it to go back up. Make sure your breakouts are, you know what I mean? You're in, you're out when you're supposed to be, and you're done. It's super simple. So make sure when you're scaling out of your position, you're taking, you know what I mean, little by little off. You don't want to see 30% on your position and then take 80% of your position off because that's going to mess up your risk to reward. So you want to make sure that you're actually holding a decent size as the stock's going up. Remember, if the stock is going up, it's going up for a reason. And you want to make sure that you're not like just taking profits super, super early and getting like super, like, how can I explain it? Like you're getting that FOMO of turning or letting a green trade turn to a red trade. Don't worry about that. You know what I mean? Just make sure your stop is at break even after that first, second TP and just play it at break even. You know what I mean? And then you have no really worries. It's either the stock goes to break even and you make little to nothing, or, you know what I mean, it keeps going and you let that money work for you and you keep scaling out. And then once you're down to like your last couple of contracts, you trail your stop loss with the moving averages on like a 1 hour to daily time frame, and you go about it like that. That's personally how I do it. So that's that with the strategy. Now, the next thing is a daily routine. This is very, very, very important in your trading. If you have no daily routine, if you have no system in the morning when you first wake up, you're never going to become profitable. You have to be systematic in everything in life in order for something to actually run smooth. It's just how it works. So in your morning routine, right? If you're a trader and you're waking up at 9 a.m. Eastern, let's say, because I'm in Eastern, I'm in Miami. So let's say you're waking up at 9 a.m. That's ridiculous, bro. You're waking up literally 30 minutes before market open. You have no time to shower, brush your teeth, go for a walk, journal, meditate, go pray, fucking go get some coffee, whatever you got to do. You need to make sure that you're waking up at least 2 to 3 hours before market open. If you are in Eastern time, wake up 2 hours before market open, bro. 7 a.m.? You can't wake up at 7 a.m.? Do you really want to become profitable? Do you really want to be successful? You can't wake up a couple hours early, bro. You know what I mean? So that's very, very important to make sure you just get up early, dude. Get up early, lock in, and do what you're supposed to do. It's that simple, right? Now, your daily morning routine, you're going to get up, you're going to do your own routine, whatever it is. Me, personally, I like to walk my dog. I like to journal in the morning about my thoughts, about my goals for the day, right? I like to journal how I feel. I like to pray in the morning. I go get some caffeine, some coffee, you know what I mean? So I'm locking in the morning and just refreshing my mind. Sometimes I'll even go for a walk. A lot of the times I just like to go out on my balcony. I have a whole balcony. I look at the city. I refresh my mind, have a coffee. That's what I like to do in the morning. So I think it's important to wake up with intention. Now, what you should be doing is journaling your thoughts, right? Journaling your plan. I will stick to my plan today. You have to put that in there every single day and put I will follow my rules. I will stick to my plan. I will lock in today and do what I'm supposed to do. You have to give yourself those like intentions every single day, those daily affirmations every day. Now, what I like to do when I first hop on the charts, I'm usually hopping on the charts at 9 a.m., like 30 minutes before market open. What I like to do is I like to scan pre-market. I like to build my watch list. And I'll even build a watch list the night before. Like I'll stay up, you know what I mean, a couple hours later and just build a watch list. You know what I mean? Scan the market, see what I do right, see what I do wrong. And that's how I really build the watch list. But still in the morning, I'll still scan and build my watch list to, you know what I mean, pick out the exact stocks that I'm going to look at for the day. Because like I said in the earlier videos, you don't want to just look at a crap ton of stocks and 10 stocks in the morning. You don't want to have a watch list that big because it's going to give you, you know what I mean, very, very stressful moments in your mornings. And you're not going to know what to take. You're going to get very startled and you're not going to perform well. So I think it's very important to size your watch list down to maybe like 3 to 5 stocks. Look at them, and the best one that shows you, you know what I mean, it's aligning with your system, that's the one that you're going to take. So I like to scan pre-market and build my watch lists in the morning. Midday, I like to manage my open positions. I don't like to force random trades midday. If I take something in the morning or if I'm already in a stock, I just like to manage my positions, and I like to go on with my day. One thing that helps me from not over trading is staying productive. You know what I mean? Go play basketball, pickleball, go golf, maybe go for a walk. You know what I mean? Go watch some YouTube videos out of Starbucks. Go do something with your life. Go to work. Go start a side business. Do something productive with your life. You don't want to make your whole personality trading, because when it's like that, you're going to get, you know what I mean, overconfident. You're going to start forcing trades that you shouldn't be because you're trying to make money. You should never do that. So midday, make sure that you're just managing your positions. Don't force anything dumb. Now close. At market close, you're going to update your journal, you're going to review your charts, and you're going to plan for tomorrow. Or let's say if it's the weekend, you're going to plan for Monday, right? It's very important to, you know what I mean, get off the charts and don't just go lollygag around. Make sure you're journaling what you did. Understand exactly how you could have done better, what you did wrong, how you can be more systematic, what you can do better, what you can do different. You know what I mean? You need to journal and you need to analyze your trading, and that's very important in order to improve. No basketball player just shoots a jump shot and it's like, whatever, I missed. Like they're wondering how they can form a better jump shot. It's simple. Remember, being a system or having a system in anything is how things will run smooth and successfully. Now, the last thing is the weekend. You know what to do. You know what I mean? Don't be partying if you're poor, if you're broke. Now, every once in a while, having fun is nothing wrong. I still have fun, and I still feel broke. I can't lie. Like, I make 6 figures, and I still feel like I could be making more. So, you know what I mean? Just make sure you're grinding on the weekends. Don't just go out and be hungover on Sunday and Saturday and feel like shit. You know what I mean? Like, it's not bad to go out every once in a while or have some fun, do those things. But make sure, you know what I mean, you're doing a deep dive into those watch lists. You know what I mean? You're building a huge foundation for your trading, right? You also want to analyze the market conditions. Understand what are the best sectors in the market right now. What has the market been doing? What's it looking like for the next 2 weeks? You know what I mean? You want to analyze the markets, get educated, and stay up to date on the everyday market. Now, that is super simple. Now, in order to collect data on your trades, you need to build data. That's very important. Now, this is a whole nother topic. Building data on your strategy is the number one thing in trading. What most of these like random ass ICT traders or funded account traders that you see on fucking TikTok, I'm not saying none of them make like any money at all, but none of those guys are going to have like real longevity with this game, right? You want to build a system that has been proven to work for hundreds and hundreds of years. Someone that I look up to is Jesse Livermore. He has passed away, but he is a stock trader that has traded our exact system. He trades breakouts and he swing trades them. He was trading this in like the 1950s, right? So it's very important to realize data is everything. And if he was trading back then, you need to collect data on your strategy, on the trades that you've taken or setups that you've seen. So this is me. This is in my premium Discord. You know what I mean? Like obviously this is not out in the public. Obviously, this is just 2 pages of it, but this is what I do, right? I collect data on my strategies. Look at the ticker symbol, the dates. Now, sometimes it could be different, but this is what I do to see what breakouts worked, what didn't work, what I could have done better, right? You can just see these were setups that I've taken and I've written down, you know what I mean? What works, what doesn't work, what I did, what I could have done differently, right? So it's very important to collect data on your strategy. And I think that this is one of the most important parts in trading. So that's what you need to be doing. You know what I mean? Screenshot your trades that you've taken, see what you could have done better, keep watching videos and keep improving. This is a process. type of business, trading is not something where it's like you're going to get rich quick and you're going to see progress in your first even year. You know what I mean? The first year is really collecting data on the strategy. Now, the last part is how to actually journal like a real trader. This is how you're truly going to journal your trades to understand what you do right, what you do wrong, and how you can collect that data. So the number one thing is most traders do not grow because they're learning from, wait, what did I write? Most traders don't grow because they are not learning from their trades. Sorry, shit's super small. And I don't know if you guys can see me squinting. I have a light behind my camera. It's hella bright. So most traders do not grow because they're not learning from their trades. It's super simple, right? Super, super simple. If you're not learning from your trades, you're not going to win. So they just move on to the next setup with the same habits, same emotions, same mistakes, right? Your journal is going to be like your playbook, right? So in the NFL, you have a playbook. Like these guys know exactly what they do, what works, what's good, what to do in this situation, right? So you have to have a playbook with your trading to understand which conditions to do this in, what to not do that in, right? That's very important. You should be documenting everything and finding these patterns that align. Now, here's how I do it, step by step, right? I write down the setup, whether it was a flag, a wedge, a range. I will label the pattern and why I liked it, right? Why did it do this? Did it meet my criteria? Did it move 100% already? Was it tight? Did it get above the moving averages? That's just an example. So that's what I'm looking at, right? Now, your exact plan, you know what I mean? You want to write down where was your entry? Where was your stop loss? Where was your targets at? Where did you take profit? Where did you end up stopping out? What made you stop out? All of the above, literally everything, right? Now, you want to ask yourself, what were the market conditions? Was it a strong market? Was it weak? Did we not see a lot of relative strength in the stock? You know what I mean? Was I fighting the trend a little bit? Was it too extended? All of these things are things that you need to track and journal within your trading. Now, the last thing is really just screenshots. You want to take screenshots of like your P&L, your stop loss, your entry, all that type of stuff to look at it and to always review it and get better at your trading. Now, the last thing is you want to include moving averages. You want to include, was the volume good? Where were my key levels at? You want to make it visual to see it and to understand it. That's very simple. How did you execute? Did you follow your plan? Did your emotions kick in? Like, were you getting FOMO? Were you getting greedy? You need to understand how you felt in these trades so you don't feel that same way and you can focus on mastering how you felt, right? Trading is all about mastering your emotions at the end of the day. So you want to rate your discipline. You don't care about the P&L. Focus on a percentage. Doesn't matter how much money you make or lose. You just focus on percentages. That helped my trading so much. Now, also, the next thing is rating the quality of the setup. Was it a 5-star setup, which means was it an A+, really, really good setup? Or did you know what I mean, jump the gun a little bit? Was it a 2, 3-star setup? Did you just take it because you wanted to make money, right? These are all things that you want to understand. So journal the quality, not just like, oh, this worked, this didn't work. You want to understand, was this even actually a good setup? Now, find your mistakes. Did you size too big? Did you sell too early? Did you get in late? Was it extended, etc.? All of that good stuff. You need to check that pattern every day, track it, and understand what works. Now, the last thing is the biggest takeaway. What did you get out of this trade? What did you learn, right? Right? Literally in one sentence, one little paragraph. You know what I mean? Like, what did I do right? How can I do this again? Or if you lost, why did I do that? You know what I mean? How can I not do that again? So always remember that every trade is a lesson, right? That is the number one thing. Every trade is a lesson. It is a lot, whether it's a loss, a win, a break even, whatever it is, even if you lose 10 times in a row, it's a lesson if you treat it like a lesson. If you treat your trading like gambling, you don't journal, you don't have a system, you're never going to actually be profitable. I've realized that over the times. I remember I would just take random setups, random trades, and I just lose and I didn't care. I would just keep moving on with the same mistakes and the same troubles. So make sure that you are making sure that you're journaling your trades, you're analyzing them the correct way, and that you're locking in. It's super simple. That was the end of this video. Make sure you join my free Discord, completely free community, link in the bio. I go live on there on Fridays and Sundays. I share charts. I share a bunch of education. It's also a community. It's amazing, bro. Join the free trading. If you're not locked in, if you're not journaling, if you're not going to buy a journal, go buy a whiteboard. Go do something, right? Go lock in and journal your trades. Build a system. These are your rules. This is how you journal. And I hope you guys enjoyed this video. Peace out.